Welcome to the 2019 Open Enrollment for Legence Bank. Legence Bank partners with Assured Partners, a team of dedicated, experienced insurance professionals that will manage your employee benefit package. Should you need assistance with a claim or have a benefit-related question, please feel free to reach out to a member of your dedicated service team. Please note that the following slides were designed to provide you with a brief overview of your 2019 benefit package. In the event of a conflict between the carrier summary and this description, the terms of the carrier summary will prevail. In this presentation, we will review the following: benefit basics, voluntary life, short-term and long-term disability, accident, critical illness, and cancer benefits. You and your eligible family members may apply for benefits if you work at least 30 hours per week. If you are a new hire, your benefits are effective on the first of the month following 30 days from your full-time date of hire. Coverage is also available for your spouse and your dependent children to age 26. Please check each type of benefit plan for dependent age eligibility rules. You and your eligible dependents must be enrolled within 30 days of becoming eligible. Your elections for the plan year will remain in effect for the full year unless you experience a qualifying life event. If you experience a qualifying life event, you may change or cancel your coverage during the plan year to meet your needs. You must notify the Human Resource Department within 30 days of the event date to ensure that there's no disruption of coverage. Qualifying events include birth, adoption and legal guardianship, divorce or legal separation, marriage, death of policyholder, turning age 26 and aging off a parent's plan, loss of Medicaid, FMLA-related leave, or loss of employer-sponsored group coverage. For a complete list of qualifying events, please contact your Human Resource Department. As a full-time employee of Legence Bank, you are eligible to apply for voluntary life insurance through Unum at the 2019 open enrollment. A benefit overview is as follows. Effective with the January 1st, 2019 open enrollment, you as an employee may elect the lesser of 5 times annual earnings or up to $500,000 in voluntary life. At the January 1st open enrollment only, or for any new hires hired after January the 1st, you are eligible to apply for up to $110,000 without health questions, as long as you're under the age of 70. Any amounts applied for that exceed $110,000 will require health questions, and it will have to be underwritten by a Unum underwriter. Spouses have a guarantee issue at this one-time open enrollment of $50,000, meaning they can apply for $50,000 without health questions at this one-time open enrollment opportunity or during your new hire event. Spouses eligibility is 100% of your employee life amount up to $500,000. Anything that they apply for, any amount that is applied for over $50,000 will require health questions and will have to go through underwriting review. Dependent children are covered live birth through age 6 months for $1,000 and 6 months to age 26 for $10,000. Please note that you cannot apply for dependent coverage unless you yourself as the employee apply for the voluntary life coverage on yourself. Spouse coverage also will terminate at age 70. There is a benefit reduction schedule that occurs at age 70. Your benefits will reduce to 65%, and again at age 70, a further reduction will occur. The accelerated death benefit is included in this benefit, as is with your employer paid life. And what that means to you is if you're diagnosed with a terminal illness and have less than 12 months life expectancy, you can request up to 100% of your life insurance benefit while you're still living. Of course, this is subject to underwriter approval. What this does is when you're diagnosed with a terminal illness, a lot of people want to get their affairs in order, and this gives them the opportunity to do so. So just keep in mind that this benefit is in your voluntary life policy through Unum. This is a sample of the voluntary life pricing. Now, please note you're not going to have to manually calculate the pricing. When you go to enroll in this enrollment system, it will have your rates calculated for you. Also note that the pricing is in 5-year age increments. So if you were to be 29 years old today, and then you hit an age bracket change to age 30 at the next open enrollment, then your rights will increase slightly. Again, 25 to 29, 29 once you hit 30, then 34 going to 35, 39 to 40, and so forth. Sample pricing for a 100,000 age 30 employee would cost $6 per month. Very, very affordable. Now, the biggest takeaway with the voluntary life is at the January 1st open enrollment only, or as a new hire, you may elect the voluntary life coverage up to the guarantee issue limit for you or your spouse, regardless of your health. It's a one-time opportunity, and it's a great opportunity for anyone who has an illness that would otherwise keep you from being approved for additional life insurance. That could be heart disease, it could be cancer, it could be diabetes, it could be a height and weight factor. All those things go into the underwriter's review normally, but again, up to the guarantee issue at this one-time open enrollment. Should you decline coverage during this one-time event and wish to apply for coverage at a future open enrollment date, you will have to answer a health questionnaire, and it will be subject to underwriting approval by Unum. This is a sample of the questionnaire, and as you can see, there's a 2-year look back, a 5-year look back, and a 10-year look back. And the underwriter may approve or may decline your coverage at a future open enrollment date, so please keep that in mind. Also, if you take out a minimum of $10,000, you can increase your benefit by $10,000 at the next open enrollment without health questions. Again, anything exceeding the guarantee issue amount will require the questionnaire for anything above those benefit limits. Disability coverage. As a full-time employee of Legence Bank, you're eligible to apply for voluntary short-term disability insurance through Unum. The short-term disability pays you an income when you cannot work due to a covered off-the-job accident or sickness, including maternity. The voluntary short-term disability benefit offers you first-day coverage for covered accidents, and benefits start on day 8 for covered sickness, including maternity. This benefit has a 4-week maximum benefit period. So benefit begins for accidents on day 1. You will submit your medical card to your provider. They will file under your medical insurance, but you file a separate claim under the Unum short-term disability benefit. Unum will pay you that money for day 1 accidents. Day 8 is your sickness. That means the first 7 days there's no coverage, no payouts. Coverage does begin on day 8, so day 8 through a 4-week maximum benefit period. The weekly benefit is 60% of your earnings up to a $1,500 maximum weekly benefit. Again, this benefit is voluntary. There will be a payroll deduction associated with it. It's going to give you the most immediate coverage under a short-term disability plan. If you were enrolled under the Guardian short-term disability plan that was voluntary, you have no pre-existing condition limitation to deal with. If you are new applying for this benefit for the first time as a new hire or an employee who previously declined a voluntary short-term disability, there is a 312 pre-existing condition. And what that means is if you've been treated for, had consultation, or taken prescription drugs for any type of illness that causes a disability within the first 12 months, there is a 3-month look back prior to your effective date and a 12-month waived period for that particular condition. Now, if you've not sought treatment or taken drugs or received any type of consultations for the disability prior to your effective date and you have a disability, then there's no pre-existing coverage condition to worry about. Sample pricing for an age 30 employee with an annual salary of $50,000 would cost $23.07 per pay period for this voluntary short-term disability benefit. Legence Bank also provides all full-time employees with the employer-paid short-term disability insurance through Unum. Now, the employer-paid short-term disability works just like the voluntary. It's going to pay you a weekly income for all covered off-the-job accidents or sickness, including maternity. But this will kick in after you've been disabled for 30 days. This benefit has a 9-week maximum benefit period. So whether or not you elect the voluntary, the employer Legence Bank will provide you the employer-paid benefit. Of course, the first 30 days, there's no coverage. Coverage picks up on day 31. It will pay you 60% of your weekly earnings up to a weekly maximum of $1,500. The maximum benefit period is 9 weeks. All this is dictated by the doctor's notes that are submitted to Unum. The doctor may say you're going to be off for 7 weeks, therefore you'll have a 7-week payout. Again, first 30 days, there's no payout, day 31. Now, if you enroll in the voluntary short-term disability policy through Unum, that's going to piggyback with this one. Your short-term will pay out first. Once that ceases and you're still on the disability, then this policy will kick in. Please note at the 2019 open enrollment only or as a new hire, you may enroll in the voluntary short-term disability through Unum without health questions. It's a great opportunity, a one-time opportunity for anyone who can enroll regardless of your health, and you're going to be approved for the short-term disability insurance coverage. Again, this applies to voluntary only because as the employer paid portion, you're going to be enrolled into that automatically. So let's say, for instance, if you take out only the employer paid short-term disability, but next open enrollment, you want to take out the voluntary. You may apply to do so, but you will have to complete this health questionnaire and submit that to underwriting for approval. And it will be based on your current health that day and the prescription medications that you're taking. So if you want the coverage, now certainly is the time to get enrolled in that benefit so that you have no health questions. Legence Bank provides all full-time employees with employer-paid long-term disability insurance. Long-term pays you an income when you cannot work due to a long-term covered off-the-job accident or sickness after the short-term disability coverage expires. This benefit is paid in full by the company, so there's no additional cost to you. With the long-term disability policy, the elimination or waiting period is 90 days. What that means to you is that the first 90 days of your disability will have no payout. Payout begins on day 91. You have separate monthly benefits and monthly maximum benefits depending on what class you fall in. Class 1 is shareholders and corporate officers. Class 2 is all other full-time employees. This is the percentage of payout, and this is the monthly maximum payout. The benefit duration or payout period is to age 65. Now, what that means to you, this is, again, dictated by the doctor's note. If you have a covered long-term disability and you cannot return to work, it could pay you to age 65. If the doctor's notes reflect that you need to return to work after 2 years, then of course you're only going to have a 2-year payout on that policy. Again, all starts on day 91. Pre-existing condition clause applies for new hires only because all other full-time employees should have already been covered by the other plan, so therefore they've already gone through the pre-existing condition clause. So new hires only. If you're new to the plan with an effective date of 1/1 or after, you have a 3-month look back, just like on the short-term disability. Anything that you, any condition that you've been treated for or taken prescription medication for that triggers a long-term disability will be excluded the first 12 months. If your disability is due to an accident or a new sickness that you've not been treated for, you have no pre-existing condition clause. Employee Assistance Program. Through Unum, you have an Employee Assistance Program and Work-Life Balance Service, and it's all available to you 24/7 via a toll-free number, or you can log on to unum.com/lifebalance. With this, you receive confidential counseling through a licensed professional who can help you with stress, depression, anxiety, relationship issues, divorce, job stress, work conflicts, anger, grief management, family parenting problems, and so much more. Again, all this is confidential. Your employer does not receive a report as to who calls in or any details whatsoever. Just know that this is a free service that's available to you, your spouses, your dependent children, your parents, parents-in-law, and then also you have work-life balances. So you have a specialist who can help you with information regarding financial services, debt management, credit report issues. They can even assist in reducing your medical and dental bills, identity theft. That's always a hot topic. So again, you do have these services available to you free to reach out to a counselor at any time after January the 1st. Worksite benefits are through Guardian. The accident policy. The Guardian Life accident policy pays you money for any off-the-job accidents. It includes payouts for emergency treatment, broken bones, burns, lacerations, cuts, back or knee injuries, or any other out-of-pocket expenses that may or may not be covered by your medical insurance so that you can pay your bills. Here's some statistics that I have added to the PowerPoint that are really quite alarming. With this benefit overview, I have pulled just some of the highlights that I would be interested in if I were enrolling in this benefit. Note that there are lots of other payouts. You don't see any payouts listed on the overview for broken bones, burn, lacerations, cuts, knee, back injuries. Again, all that is going to be posted in your benefit summary that's going to be posted on the internet. This is a broad overview. Now, there are two options. You have a dual option. You have option one that's called the value plan. Option two is Premier. Again, what I've done is I've gone in and I've pointed out the biggest things, the payouts that I want to bring to your attention in considering an accident policy. There is an accidental death benefit that is related to option two. If you were to be killed by an covered accidental death, then of course you have a $50,000 payout, a spouse $25,000, and a child $5,000. You know, folks, anytime we get out on the highway, there's an opportunity for an accidental death to occur. This is just an additional payout. And of course, this would be in addition to any other life insurance that you have. Common care will be airplane. You have 200% of your accidental death benefit. There's no pay out on the option one. You have wellness under option two. Accident emergency room treatment, there's a payout there on both plans. You can see option two is going to be the richest plan all the way down. You have an air ambulance payout of $1,500 on option two and $500 on option one. One of the biggest takeaways here I found was the hospital admission. If you're admitted to the hospital, option one pays you $750 and $1,250 on option two, plus there's a daily rate for hospital confinement. Each day that you're hospital confined up to 1 year will pay you $175 per day or $250 per day, depending on which plan you're enrolled in. You also have hospital ICU admission payouts and high ICU confinement up to 15 days maximum payouts on both plans. And included on option two are chiropractic visits. This is something that typically people are looking for as well. So your medical will pay for your chiropractic visits. You turn around and you send a claim to Guardian and they pay you money for theirs as well. This column basically reflects your pricing. The pricing has not changed from last year. This is pricing for option one and option two. Please keep in mind also that employee and children coverage will go through age 26. So if you're enrolling in this benefit for the first time, there's no pre-existing clauses. Basically, you enroll and you get the coverage. There's no underwriting. This will cover all future claims, no retroactive claims. The cancer policy. The Guardian Life cancer policy pays you money upon the diagnosis of an internal cancer and as you incur cancer treatment. Again, the money's paid to you so you can pay your bills. You may need the funds to travel, to and forth to get treatment, or to offset your medical costs, or even to pay your bills. Now, a lot of people, may go into country groceries and you see a big pickle jar with a picture of a family in need of help with medical expenses. Let me tell you, that jar doesn't go very far. It's a great gesture, but if you have bills, you're lucky to get the gas money out of that jar. Now, the medical bills are going to be hopefully paid for by your medical insurance. Of course, you're still responsible for the deductible and out-of-pocket if you had a really high claims year. That's something to consider. But what this does is if you want to pay your light bill or your truck payment with this policy on the funds that you receive, that's up to you. The money's paid to you. And doing a broad overview, you have a triple option. I've just put a overview here of the benefits that I would be interested in if I were enrolling into the cancer policy. These are the biggest takeaways. Now, note that there are a lot of underlying coverages. You need to refer to the cancer overview just to see what all additional services are covered. Option one is going to be the most affordable, but it's going to be the leanest policy of all. Option two is obviously going to be the middle policy, and option three is going to be the richest, and of course it's going to be the most costliest. With the option two and option three, you have an initial diagnosis payout for any new internal cancer diagnosis. The money is paid to you upon an internal cancer diagnosis for you, your spouse, or your dependent children. You also have chemoradiation benefits that are paid on all policies. Option 1 and Option 2 in those areas pay up to $4,000. Option 3 can pay you up to $12,000 per year. Experimental treatment. A lot of the older cancer policies do not cover experimental treatment. And you know that's the way the providers are going nowadays to treat cancer, is they're trying whatever they can do to heal and cure that cancer. So that is a lot of experimental treatment payouts. Option 2 has a $100 a day daily rate to $1,000 a month per max, and Option 3 is a $200 daily rate with a $2,400 monthly maximum payout. Again, as you incur the treatment, you submit your invoices, and Guardian turns around and pays you money. You have a hospital confinement payout on all 3 plans, and then an ICU confinement payout. Again, refer to the cancer policy because it's going to give you more details than what I have put on this overview. And, you know, one of the biggest takeaways here in 2018, an estimated 1,735,000 new cases of cancer will be diagnosed in the United States. This is huge. And if the cancer has not hit your family directly, I'm sure you have friends who have been through it. As we all know, if a child is diagnosed with cancer, you're going to travel to the ends of the earth just to get them the best treatment at that specialty hospital. And that's what this cancer policy is for. It's to put money in your pocket so that you can, you know, survive that financial hardship and hopefully, you know, get the cure that you need. This is the pricing per payroll deduction for Option 1, Option 2, Option 3. The abbreviations stand for employee only, employee plus spouse, employee plus children, and again, that's through age 26, and family coverage. The last benefit is the critical illness. The Guardian Life critical illness policy will pay you a lump sum benefit in the amounts of $5,000 to $25,000 upon the diagnosis of a covered critical illness. Critical illness insurance can help with expenses that medical insurance doesn't cover, like deductibles or out-of-pocket costs or services like experimental treatment. You may have to make home modifications if you were to have, you know, a heart attack or a stroke, or even have a specialty vehicle to get around in. All of this is the what ifs of what could happen if you're diagnosed with a critical illness. So it's going to pay you again upon the diagnosis. So these are very important stats I want you to read through. And again, what I've done is I put a benefit overview together for you, but there are more coverages. So you will need to refer to the Guardian Benefit Summary to look at all coverages. Now, the 100% payout for first occurrence will include invasive cancer, heart attack or stroke, organ failure, kidney failure, ALS, coma, loss of hearing, sight or speech, Parkinson's disease, or severe burns. Let's say, for instance, you enroll in a $20,000 lump sum policy. Upon the first occurrence or the initial diagnosis of any of these benefits, you're going to be paid $20,000. The money is sent to you, and you use that money however you wish to use it. If you had a second occurrence, some of these payouts will have a 50% payout for second occurrence. So if you were to have a heart attack, you get paid the $20,000 if that's your benefit you elected, and then upon the second heart attack, you get paid the $10,000. Some of these do not offer the 50% payout, so you'll need to look at your overview, your true benefit summary, again, to look at all additional coverages that I did not list on this overview. Sample pricing for an age 30 member for a $10,000 payout is $8.37 per pay period. Special enrollment notice at the 2019 open enrollment only or as a new hire. You may apply for the Guardian Critical Illness Benefit by completing a paper application. Please note that the critical illness benefit could not be managed by ADP. Therefore, this benefit is the only benefit that will require a paper application. Now, as a new hire, you may apply for $5,000 critical illness without health questions. If you want to apply for a higher benefit, again, you can go up to $25,000. You may do so by answering health questions. Guardian reserves the right to issue or decline coverage based on their underwriting review. But note that this $5,000 will be issued at your initial enrollment event, either at this as a new hire. If you wait until a secondary open enrollment, let's say you decline that benefit today, and you want to enroll at a future enrollment date, you will have to answer a health questionnaire as listed below. Same way if you're adding a spouse, you will have to answer a health questionnaire if you previously declined the benefit. Now, the cancer benefit, you may apply for the Guardian Cancer benefit if you've not been treated for or diagnosed as having cancer in any form, acquired immune deficiency syndrome, AIDS, or AIDS-related complex ARC within the last 5 years. If you have not, then you can be issued the coverage by Guardian. But if you have, the Guardian will decline your application. Lastly, you have an accident benefit. At the 2019 open enrollment or as a new hire, you may apply for the Guardian accident benefit. The Guardian accident coverage does not require any health questions ever. As a reminder, this is your annual open enrollment. You must keep all elected benefits in place until the next annual open enrollment unless you experience a qualifying life event. And with a qualifying life event, as we discussed in the previous slides, you have 30 days from the event date to submit your paperwork to Human Resources. And that concludes the 2019 open enrollment for Legence Bank.